Hello, 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 traders. How are you doing? So everything should be fine and dandy. I'm just making sure that everything is... Can everyone see the right screen? We're looking at... There we go. Yes, we've got the right screen. Perfect. So just pop a little hello in the chat box. And in fairness, I can see there's a few new names in the attendees on the Zoom. So just pop a little hello in the chat box if this is your first time. And pop a little hello if it's your more than first time, for that matter. Excellent. We're getting going. Visuals are good. Thank you very much, Zeke. Hello, Brett. Hello, Randall. Hello, Glenn. Hello, Hassan. Ian, Manny, David. Hello. Right, let's get rocking and roll. Looks like everything is the way it's supposed to be, which is always a pleasant surprise that we've done it the right way for a change. Right, so then I thought we would look at how to not chase every stock or every opportunity or every setup, and quite literally zero in on finding quality stocks. To be fair, it doesn't have to be stocks. It could be futures, could be indexes, could be currencies, but just how to zero in on the best opportunity. I like to trade stocks. So I'm going to focus on stocks in under 20 minutes. So let's get into it. Now, if this is your first time, my name's Phil Newton. I am looking to explain to you how I do what I do. I'm always asked, why don't you give it away? Well, I do every week on these Friday sessions. I try and give back to the community as much as possible with no catches, gimmicks, no oh, by the way conversations, just to try and do a good deed because, you know, I never had anyone to ask when I started out. So that's all I'm trying to do here is just be that person that you can turn to if you need it. You can work more officially with me if you choose to. It is a choice. Whatever happens, I've got a lot of time for serious traders and I will always point you off in the right direction. My style of trading is swing trading. I want to capture the daily, weekly, and monthly swing with a variation of essentially the same strategy. I'm also a big fan of trading should be simple. Again, I'm just a poor farm boy who just figured a few things out. I like simplicity. I don't need the complexity in my own life, and I certainly don't need it in trading. And don't get me wrong, I've done the complexity. I worked for a black box software, which was all heavy on the mathematics and algorithm. And what I figured out many years later is all that bollocks isn't necessary. And we can just plug into a simple system. And I'm going to show you how I do that in a moment. So that's what I'm going to do. I'm going to outline what I'm doing, how to basically find dips, sell rallies. And if you've not got my fancy software, I'll show you how to do it with a free tool. So I'll be going through that in a moment. As I said, or as I say every week, my objective is to give you the tools, the rules, the software to assist you, and whether it's mine or free tools for that matter. I want to be a community to support you. So if you're not in the community, my main community is over in Slack. You can click on any of the links that get there that you receive from me in the emails, and that will take you to the registration and come and join the party. If there's a public area and there's a private area for the members community. And so if you're a member, you're not in the Slack, come on over and join the fun. So let's get straight into it then. Stop chasing every stock and start finding quality setups. This is the constant question that I get asked. How do I find opportunity? I've got to admit, when I first started out, it was how do you find the best opportunities? And you start off by looking at whatever you're looking at the time. I was drawn to patterns, geometric shapes, but you could equally be looking at indicators, tools, which is kind of my focus these days. But whatever methodology that you're currently focused on right this moment, in the textbooks or the course that you're looking at, they don't actually tell you how to find the opportunity in real time. They always show you afterwards, after the fact, with the benefit of hindsight. Here's the perfect setup. At no point did they ever tell you how to find it in real time and then how to trade it in real time. So the reality is we're not looking for an after the fact setup. So inevitably you chase the move, you chase the opportunity, because the author has shown you the perfect, well, textbook example. So I'm going to show you how I do it in real time, and that's going to be a part of the process. Some of what I do is to teach you or show you some misconceptions. Buying the dip is what I do. I also sell the rally. I also like to buy range lows, sell range highs, the break of range highs, and the break of range lows. There's essentially 6 patterns that I like to trade. I'm going to show you the BTFD, and we can flip it over and we can sell the rally. And for most people, it doesn't mean what you think it means. Again, what we need to do is we need to add layers of detail rather than just take the headline, buy the dip, sell the rally, buy the breakout, sell the breakouts. We want to put definition on, well, to buy a dip, you need to know what the trend is. And such a simple addition. And you might be mistakenly thinking, of course, Phil, of course that's what you do. But really, do you do it? Is what I would counter. And most people don't, and certainly in my experience, and some very well-experienced traders just buy any down day thinking it's the dip in the context of a trend. The other thing that we're trying to avoid is what I lovingly refer to as zombie trading. We do not want to be sat here flicking through chart after chart like mindless zombies, jumping from time frame to time frame, indicator to indicator, hopping around like we're on a space hopper. We don't want to do it. It's a waste of time, it's a waste of resources. And while we're at it, we don't want to do that triple time frame, drop down approach bullshit. I'm sorry, Van Tharp, but it was complete bollocks. Waste of time. All you're going to end up doing is be sat there at the computer wondering where the trade is. And if you ever find yourself asking, where's the trade? Then it's not that you're doing it wrong. It's just that you've not got enough definition on what you're doing or what you're looking for. So where I've ended up with that after 28 years and kind of where I currently reside in my own trading career is I'm starting to make statements. There is the trade is what I want to end up. I never want to be asking myself, where's the trade? And I did this earlier in the week, and again, in our private mastermind, I caught myself doing this. I wanted to trade, and if you've read any of my emails or follow me on social media, like I am actively looking for a bullish turn in the market, some bullish sentiments. But I was really struggling to I legitimately can't find a bullish trade. I'll explain that later as well. I legitimately can't find a bullish trade. I was looking for, where's the bullish trade? So taking my own advice, I took a step back and pretty much didn't do much on the main move of the day strategy on the S&P because I couldn't boldly say, there's the trade right there. So that's what I'm aiming to do. So again, we want to profit from the main move of the day, the main move of the week, the main move of the month or quarter. Again, it's a process. In each case, we want to be able to say, there is the trade. It is what I refer to as classic trend trading. Again, buying the dip, selling the rallies, and I'm going to explain how I actually do that. There's a short-term version which captures the main move of the week on a select number of stocks. And the latest addition to the family, I always say this, although this is the latest official addition to the strategy family. This is actually the first strategy, or a variation of this is the first strategy that I actually traded way back in 2001. So again, with the objective of capturing the main move of the day. Fast forward all those decades later, put everything that I know now into the strategy that was trading back then, so that it is rigid, it's rule defined, it's mechanized. And it also means that I don't have to be sat at the desk. Back then, I was sat at the desk doing the thing that I hate. So now we get to check in, check for trade, and check outs, a couple of times a day, if we choose to. And the reality is you'll, often know at 10 a.m. Eastern if there is a trade or not, and you can put it on accordingly. While I'm throwing some slides around, again, please keep in mind there is a new podcast. We're on show number 14. I'll have to update the image. Show number 14 went live today, so if you want to download it, just simply search AntiVestor in your favorite podcast player, and you can plug in. Currently, I'm aiming for every 3 days, so there is a twice a week essentially is a podcast. And I think that's it. There we go. So where's my fancy slide? There it is. Okay, so let's go and stop chasing every stock and every opportunity. Let's go and find quality stocks in under 20 minutes. Again, what we want to be able to do is get results. Again, I get my own results, as I mentioned, but the process finds great stocks. These are some closed trades. Recently, the brokerage statement is on the chart. Again, there's some losses there, some break-even trades. And just to say that not all of them are the way that they work. They don't all ideally work. But ultimately, what we're trying to do is to find good stocks with consistency. Again, it's not just me. I get my own results, but obviously my students get results as well. That is probably more important to me than my results. And obviously, I know what I'm doing, but the whole promise that I give to each and everyone that works with me, and even on these free sessions, is that trading should be simple. It should be replicatable. Wrong slide. There we go. Trading should be simple and it should work. And it should work not just for me, it should work for everyone. So that's what I mean by replicatable. And that's what rules allow us to do. If something's rule defined, it's systematized, it's processized, other things that end in eyes. Again, just like a pilot has a pre-flight checklist. You know, when a pilot is trained to a sufficient standard, you don't have to be a good pilot. You just have to be competent at what you're doing. And there's pre-flight checklists and systems and processes in place that help with competency and consistency. Again, I refer to what I do as production line trading for that same reason. There's a pre-flight checklist or pre-trade checklist. You know, we're moving our decisions down the production line so that we can get a completed product, in this case, the trade, so that we can trade it. And then we have a management process along the same way. So that's what we're aiming to do. What we're going to focus on today, as I've already alluded to, is the finding of quality stocks. So let's go and take a look at that. Now we are live streaming. I can see a few peeps there just watching the live stream. So if you've got any stocks that you want us to look at, if you've got any stocks that you want us to look at, please feel free to pop up comments. I can see the bots are already at it. Yes, we'll have to block some of those rude comments, I think. Just give me a second, folks. We've got some idiots who thinks it's fun to spam sex sites on my feed here. There we go. Nope. Ban. Let's ban the prick. Okay, that should be done. Right, okay. So I'm going to go to a website again. I don't normally... Again, I've got fancy software. I can appreciate not everyone has it. It's a little bit pricey for some people to get rocking and rolling, but essentially I use a software called TradeStation. This is what it looks like. Again, I've had most of what I do custom coded so that I can go, oh, here's all the bullish trades, here's all the bearish trades, and I can find those opportunities. So what I'll do first is I'll just show you what I'm looking for on my charts, and then we'll go to the online scanner. And the good thing that I can do with that online scanner is that I can build that up, and because it's a web browser, I can just paste the link. So when we finished, I'll give you the link that we create so that you can just jump straight to that scan that we build together here today. Right, okay, so what I am looking for, press the wrong button. What I'm looking for is to buy the dip and sell the rise. So I'll go through both because it's usually easier if this is the first time that you're seeing this to look at the buy the dip opportunity. But right now we're in a bear market, so we've also got the sell the rally opportunity. So let's look at both and we'll get there in the end. Let's tidy that up. Right, so the first thing, there's 3 lines on the chart. There is this 200 period moving average, there is a 50 period moving average, and there is a 20 period moving average. There is nothing magical about this. There's nothing special. There is no holy grail. They just allow me a reference, a frame of reference to say, where is price in relation to the moving averages? That's all it's doing. It gives me a mechanical framework. So the first thing that I'm trying to do is remove discretion from my decision-making process. We could easily say, okay, price starts at the bottom left, it finishes at the top right, almost finishes at the top right, so we must be in an uptrend. But at what points do you start saying this is a downtrend? So what these tools allow me to do is to put some structure and framework, more importantly, a mechanical structure and framework that says this part of the chart is in an uptrend, it's bullish. This part is in a downtrend, it's bearish. I'm only going to be looking for bullish trades when this chart is bullish, and I'm only going to be looking for bearish trades when this chart is bearish. And I just a little bit of a sidebar detour. I don't only look for bearish trades or bullish trades on anything that I'm trading. So the stock universe that I trade, I don't fall into the trap of, well, The S&P right now is bearish, so I'm only going to look for bearish trades. I don't play that game. There's going to be a number of bullish trades and bearish trades. And what I want to do is trade a portfolio so that we've got a little bit of balance. It's mostly bearish at the moment because that's the nature of the markets, but there are some bullish trades, mostly in the energy sector, if I'm going to be fair. So the idea is when the market swings up, the bullish trades in the portfolio will swing up. The bearish trades will have a rally in a downtrend. You either have to sit through it, manage it, or it's going to set up a brand new trade for you. And then obviously when the bearish swing down in the market happens, the bearish trades will growl and make some profits. And the opposite to the bullish trades. The bullish trades will, well, in a perfect world, would continue to rally. But the reality is they'll probably retrace or give you a management opportunity, or they'll set up a new buy the dip opportunity. So there's three possible things that could happen. Anyway, a little bit of a sidebar. So we want to look at the 200. Again, just for simplicity, I'm going to focus my attention on the 200 and the 50-period moving average. Again, there are three. Again, we can add in the 20-period moving average as well. But just for simplicity, I'm going to focus on these two for the moment. So the first thing is the 50 needs to be above the 200. At that point, I shall be calling myself bullish on the charts. In this case, we are looking at the S&P, so we can be bullish on the markets at the same time. The opposite would be the 200 needs to be below the 50, and then we would call that bearish. That's it. Nice and simple. The benefit of doing this is it's mechanical. That is a statement of fact. When that condition has been met, I will be bullish. Now, notice that I'm not saying a buy. I'm not an automatic buyer on anything or an automatic seller on anything. I'm just saying, okay, this is my bias for direction. So I also want to see price initially push away from those moving averages. So you're never going to capture the top and the bottom of any movements, but I think we can all agree that the bit in the middle of the trend, there's a lot of money to be had with the bit in the middle. So don't try and capture the top and the bottom. It's just as easy and just as lucrative to capture the bit in the middle. So wait for that initial push. You are not missing anything. So the next part is, so bullish, we need to see price push away, which is cool. And then we're going to look for price to pull back into the 50-period moving average. I'm just drawing over it, but push away, pull back in, push away, back into the moving average, push away, back into the moving average. I'm just going to highlight the times it touches the 50-period moving average. Push away, comes back, pushes away, comes back. It pushes away, that's our profit opportunity. It comes back and touches the 50, that's our buyable dip. So what I'm looking for are those times where it comes back to and at least touches, it can go below like it did here, but at least to the 50-period moving average. And that is what I'm going to quantify as a buyable dip. That is what I'm going to qualify as dip. So we've got a trend, and then the downward movements will be defined as not any down day, but it needs to be down for a period of time and then touch the 50-period moving average. And that's what all these arrows that I'm just circling are. All of these arrows on the chart, they're times where price touched the 50-period moving average. So that when price moves away, that's the bit that we want to profit from. Buy the dip, profit from the rally, buy the dip, profit from the rally, buy the dip, profit from the rally. And of course, we could get it in one big trade, but we only know that with hindsight. So I want to buy the dip, profit from the rally, buy the dip, profit from the rally. And conversely, we would do that on the bearish move. So let me just pause there. Is everyone happy with the logic? So this is what it means for me to buy the dip. I want to be able to buy the dip in the context of a trend. We've defined the trend, we've defined the dip, and it determines a dip worth buying. Fucking amazing. Everyone happy with that? I can quite happily die, get hit by a bus. You know the secret sauce. Have it with my blessing and go and make some fucking money and stop bitching that you're not making this work. Because I've got to admit, I've had a few people this week that have been pissing me off dramatically saying, oh, it's a scam, it doesn't work. It fucking does. Here's the proof. Magic button time. I can take those rules that I've just described with this software and say, if I just bought the dip and conversely sold the rally, as I've just described, sprinkle in some money management, which I prefer. This is the equity curve over the last 20 years that says, if I just bought the dip and just sold the rally and did nothing else and didn't think and didn't worry about the Fed and didn't worry about Elon's tweets or Trump's tweets or whoever's tweeting at the moment, whoever's the current flavor on Twitter, if I did nothing else, bought the dip, sold the rally, didn't think a great deal about it, this is what a positive expectancy strategy looks like. This is what making money on average looks like. This is what, well, let's put it into a different context. This is what you'd expect to see in your profit and loss accounts or your management accounts if you're running a business. We're running a business, folks. It's not a hobby. If you want a hobby, go and take up golf. But this is what we'd expect to see. Profit and loss forecaster. The whole logic of doing this and having a rule-based trading system that's defined, robust, time-tested, proven, validated. What are the chances of this suddenly not working in the next? It's bear in mind, it's worked for the last 20 years. Buy the dip, sell the rally. Nothing else. What are the chances of it suddenly not working over the next 6 months, over the next 12 months? Well, let's put it that way. Over the next 12 months, what are the chances of it suddenly not working for the next 12 months? There's going to be periods of time where it doesn't work. But the reality is, the losses are minimal. But in context, over a long period of time, over multiple occurrences, on average, there is a positive expectancy, an average return, an average profit, just like every other business. Yeah, not too much. It could, though, you're wrong, Glenn. You're absolutely right. It could happen. It could happen on this one chart where, you know what, we just happen to be trading the drawdown phase, because all strategies have a drawdown phase. But you know what, there's a couple of small ones, but there's three. There's three big ones. But on average, over 20 years, that's okay. Now, this is where the portfolio side is. Okay, well, what if you trade that one chart and that's the only thing, and this is the only thing that you trade in, and you hit the drawdown phase, and it's going to last 6 months? It can happen. Well, the way I trade is I'm going to trade a portfolio. I start all my trades off with 25 stocks or 25 opportunities, 25 charts, essentially. Okay, there's going to be, out of those 25, there's going to be, say, 5 of them that are just not setting up. They're in dip or in rally mode and there's no trade on. There's going to be ideally 10 that's bullish, 10 that's bearish, and 5 that are on the sidelines. Of those 10 that are bullish and 10 that are bearish, there's going to be 3 to 5 that are just, not going anywhere. They're in that drawdown phase. They may turn around, but you've got 7 out of the 10 bullish trades and 7 out of 10 bearish trades. Again, these are just approximations. Just keep in mind. So one chart that is underperforming, as I like to phrase it, because we're in the drawdown phase, and it'll turn around, it'll get better. But 1 out of the 25 is not working. You've got, on average, lots of others that are working for you. Does that make sense? So that's the whole benefit of doing this. We've got a strategy that works on a chart that is consistently proven for it to work on, and then we go and do that 25 times. It's great. I don't need one trade to work. I don't need to hope that it works. I don't need to bet the farm on one opportunity. I just need to have a business and have a portfolio of trades, 25. It's not many. Just like you might have a nice, well-functioning business and you've got 25 employees working for them. What if one of them phones in sick that day? Okay, you've got one of them phones in sick. You've got 24 employees that are going to work for you in your business of trading. I think it's a nice metaphor. Again, you're not reliant on one employee opening up the shop and doing everything for you. You've got a nice expectation that, your 25 little money workers, there's going to be some of them that don't work. Some of them turn in sick. Some of them are robbing from you. The usual things that you have when you're running a business with multiple employees. But the reality is on average, you should still expect a positive return. Manny, the recording, it's been live streamed. It'll be available immediately. So it's on YouTube right now. It's been live streamed. So if you want to watch this again, you can do. If you want to watch any of the past episodes, you can also do that as well. Right, so we want to buy dips and sell rallies. Okay, so coming back to the thing that I mentioned is, okay, you've got the fancy software, Phil. That's great. How do I do that if I don't have TradeStation? Because I appreciate that not everyone has it. I'm going to go to a website called FinViz. Again, I'm not affiliated with them. It's just they've got this thing called a screener. And then, again, we don't want to look at every stock every day. So right now, I'm looking at the entire universe of stocks on their scanner on the US markets. And they've got this, again, if you go to finviz/screener, there's a little link at the top there. Again, when we finish doing this, I'll paste the link in the chat box, so stay around. But what we have is, again, every possible universe or every possible stock on the universe. And there's currently what, several thousand stocks just on the US markets. So what I want to do is I want to trade stocks that are what's known as liquid. So the current volume, I'm looking for average volume. So I'm just going to look for average volume. There we go. So technical. I can never remember where they all are. Bear with me a second, folks. Bear with me. So let's do descriptive. So on the front tab. So I want to find, let's do volume. The current volume. I want to trade stocks that have over 1 million shares on average. Oh, there we go. Average volume. There we go. It's over on the left. Column number 2. Average volume is over 1 million. And straight away, we come down from nearly 500 pages over on the right here, 500 pages down to 94 pages. So just by taking out the stocks that have little to no volume, why would we do this? You want a liquid market. Imagine going to an auction. Or more importantly, imagine taking your prized family possession to auction. You think it's going to be worth a fortune, and there is one person at the auction, and you think that your antique has been valued on the Antiques Roadshow, or whatever the equivalent is wherever you're on the world, has been valued at $1 million. Great. We're going to make $1 million selling the family jewels, whatever it is. But there's no one at the auction. There's one person there, and they're not even that interested in your antique. That's what a marketplace is. Your stocks to be traded at an efficient price on a regular basis need people in the auction, because that's what the stock market is. It's these days a digital auction. It used to be open outcry in the trading pits. If there's no one in the trading pits, there's no markets. Does this make sense, folks? So if you've got an average volume traded, then we know that there is what's known as a liquid marketplace. This brings the bid-ask spread narrower, the cost of business, the difference between the buy price and the sell price gets narrow. Great. That means that the cost of business, the difference between wholesale and retail, to put it into a business context, is narrow. So that's good for us as traders because our cost of business is minimal. Now, if you try again, if you think back to, if you've seen it, the Wolf of Wall Street illustrated this, and this is kind of what let him down his scamming road. The pink sheets was what was mentioned in the Wolf of Wall Street. They're not very liquid marketplace, if not at all liquid marketplace. They're even off market in some cases. So there was a 50% premium between the bid and the ask. So if the stock was $1, then the buy price and the sell price, there was 50% difference. So 50 cents of the $1 share price was the difference between the bid and the ask. So he could buy it and he could sell it to the customer and make 50% markup on the product, on the stock straight away. That's essentially the scam that he was doing. He was selling shit stocks. There were junk prices with no liquidity, and he would take his skim on the top. And that's basically what he was doing. What I think. So to avoid the bullshits, we want to trade liquid stocks because that means that we get in and out at prices we want. Another example of this was, do you remember the meme stocks, the GameStop? I know plenty of people that had bought GameStop on the ride up, but it was such illiquidly traded that they couldn't get out at the price that they wanted. They had all this paper profits, thousands of dollars of paper profits, but they couldn't close the trade. There was no marketplace for GameStop, despite the meteoric rise of the stock. So what's the point of trading GameStop if you A, can't get in, and B, can't get out if you did get in? It doesn't matter how much money you're making if you can't close the trade. So liquidity allows us that efficiency to get in and out at a sensible price anytime we want. Now, we can obviously put that number up, and let's just do that. If you put that up to, say, 5 million, where are we? So over 1, 2. So let's just put it over 2 million.
Again, on my software, I can change that to 5 million. And again, you just put that number up if you want. If you want to make the universe smaller, the simplest thing to do is increase the number to from 1 million to 2 million, 5 million, 10 million if you want. And you'll get this smaller and smaller universe of stocks that are the most liquidly traded options. The liquidly traded stocks. Now, the other thing that I'm going to do is, because I know I trade stocks as an alternative, my apologies, I trade options as an alternative to trading stocks. So over on the right-hand side here, I'm going to check the box that says, does this stock or these stocks, do they have options? Because this is going to be more capital efficient for me. So this is another thing that allows each and every one of you, regardless of your capital in your account, you can have a small account and you can trade 25 stocks. So having using an option as an alternative to stock means that we eliminate the majority of the capital requirement. So it's the most capital efficient way of trading the choice that we have. So again, that brings it down even further, so we get more sensible a sensible list. I think looks like it's including the ETF. So again, it works on ETFs, works on individual stocks. So we've got, firstly, a universe of stocks that is sensible. So we've got, what do we got? So there's 50 pages, 20 to a page. So what's that? 2,000 stocks here. Great. So we can bring that number down even more. Again, way to do it would be to increase the number of shares. I don't see, again, I'm just using a free tool here just to demonstrate, but you should be able to put a custom number in if you do pay for it. I think it's only a few dollars. Again, I don't need to use this tool because I've got TradeStation. But other things that we might want to do is I also want to trade stocks that are above a certain price. I like to trade stocks that are greater than $20. There we go. Price over $20. Now, this is a personal preference. Because I'm trading options and alternative to stock, I need, when the stock moves favorably, a portion of that movement gets transferred into the option. So I need the dollar movement. So again, personal preference, I like to trade stocks over $20. So I'm going to do that. And again, we have, that's halved the number of stocks. Again, I don't trade penny stocks, again, for all the reasons that I've just mentioned. I don't want to trade illiquid junk stocks that go nowhere. And all we're doing is just getting rid of what is likely to be shitty stocks. So let me pause there. Is everyone happy with what we've done so far? Liquid, optionable, and over a certain price. I don't trade penny stocks. I don't want to trade junk. I'm trying to find gold. I'm trying to find diamonds. I don't want to mine for nonsense. I don't know where I was going with the metaphor. I don't. We want to pan for gold. We want to pan for diamonds. We don't want to look for, well, it's still viable. There's nothing wrong with it, but I'd rather trade for the gold and diamonds rather than stress over tin or something less valuable. So that's what I'm looking for. Good quality. I don't think the metaphor worked out the way I was planning, but there we go. That's where we ended up. Fabulous. So now what I can do, so these are the descriptions. The next thing I can do, let's click onto the technical tab. And now I can start looking for above or below the moving average. So if you want to find bullish trades, we can find price is above or below. So all we're going to, there's lots of choices, but all I'm looking for is prices above a simple moving average, nothing complex. Now we're in a bear market. Most of the stocks that I'm trading at the moment, about 80% of my choices are bearish, but let's just say that you want to profit from downward movements in the market and see if there's any stocks are in a downward. So we want price below the 20, my apologies, below the 200. Again, this is what we're looking for. So below the 200 for a bearish trade. In fact, let's just step back. Let's just step back. There is a golden crossover. It's called Gold Performance. I remember seeing it. It's been a while since I've used this. Simple 50, simple 20, 50, absolute range. I'm wondering if we have. There we go. So the 200 crossed. Okay, there we go. So that's what I was looking for. My apologies. I knew there was a function for it. So you've got two choices. So remember when we said we're looking for the 50 to be above the 200 or the 50 to be below the 200. So we've got the above and below. So so what do we want? We want bearish, don't we? So the SMA crossed and the 50 period is below the 200. So we should be able to click that, and that's going to give us all the stocks in the bearish direction. In fact, I'm going to go back actually, because let's do any. Let's do what we did originally. So you got that choice. Again, I have to remember that there is let's just do price is below the 200. So price crossed. So price is below the 200. Okay, my apologies for bouncing around, folks. I do apologize. So I'm looking for price is below the 200. So we've done that. So why is that? So have I clicked too many? Let's go back to, oh, there we go. It's the top choice. My apologies, folks. I do apologize. There we go. Price below the 200. There we go. Price below the 200. Price below the 50. And let's do price this. Now, remember, price needs to be above the 20. So I'm going to lay on the 20. So price below the 200, below the 50, but this time it's above the 20. So this should be a rally in a downtrend. Let me just draw on with the widgets. Cheers, Glenn. Thanks very much. I'm trying to do this with a little bit of haste. I think it's been a while since I've used this tool. So again, apologies for going around the houses. So what we've just done, price needs to be below the 200, below the 50, but it's above the 20. So what we should be looking at is a rally in a downtrend. So below the 200, below the 50, below the 20, and above the 20. So we should be looking at a rally in a downtrend. That's what we should be looking at. Does that make sense? Everyone happy with the logic? So that's what we've done. This is how we can scan. Again, we've got a clear picture of what we're looking for. It makes it easier to plug into a tool. Now, what we can do with this is this gives us almost 100 stocks that meet that criteria. Again, there might be some ETFs in there as well. In fact, it's looking like we've got the UK and Irish stocks. So actually, let me just go to the country. So we want US markets. So we want index. It's there we go. Exchange. Let's not worry about that. Industry. I think we're just going to have to put up with the fact that we've got stocks outside of the US. Again, let's not worry about that right now. There's a few in there that we maybe not, or maybe wouldn't include there. Right. Okay. So what we can do, let's take out, you got this little, all I've done here now is I've just moused over. So we've got this scan, and let me just paste this in. So we've got what's looking like a rally in a downtrend. Is it country? Is it? There we go. Good eyes, Glenn. Good eyes, Glenn. Let me just go back. So there we go. US. Perfect. It shouldn't have a huge impact, but it'll just get rid of the, things that are perfect. Right. So let me just paste that into the chat box so everyone can have access to it. So what we've built is a rally in a downtrend. And obviously we can say price above the 200, above the 50, but below the 20, which would give us a dip in an uptrend. So we've got a shallow rally in a downtrend. We're going to change this in a moment. But all I'm going to do now is I'm going to mouse over the top ticker, row number 1, top left, AA. Can everyone see that we've got, for all intents and purposes, there's the downtrend and there's the rally. Is everyone happy with that? Is everyone happy with how you can, when you know what you're looking for, like finding something? I mean, it's taken me, it's taken me 20 minutes to build this because I'm not familiar with the layout, in fairness. But when you've done that, you can bookmark that URL. You've got a copy of it. You only need to do this once. So the longest time is it takes, the longest amount of time takes to actually build this the first time. Again, let's check out Adobe. So there we go. So we've got another, oops. Bear with me. Why is this not? Oh, I was just able to do the thing. Oh, no, there we go. It's not letting me do it. So we've got rally in a downtrend. That doesn't look, so AFL, it looks kind of sideways. AIG looks kind of sideways. Amazon, that looks like it's trending. Now, can you see the difference? Again, I'm just using the last, in fairness, for speed, the last 6 months. So AA, it starts at the top left, finishes at the bottom right, and just in the last part of the last few weeks, we've got a rally in a downtrend. Adobe, trending. Start at the top, finish at the bottom right. Small rally in the last month. Great. AFL, it looks like it's been in the middle of the charts for 6 months. Leave it alone. AIG, leave it alone. Amazon, clear rally. Start at the top left, finish at the bottom right. We've got a rally in a downtrend. Cool. So we just need to visually inspect if you're doing this manually, but we have this very easy way. Now we've got this rally above the 20-period moving average. That's our rally. So we can call this a shallow rally. Shallow rally. That's a bit of a mouthful, but there we go. Let's say now that price is above a deeper retracement. So below the 200, above the 50, above the 20. Let's see what happens. So we've got a slightly deeper retracement. So again, we're looking for a downtrend. Now, AB, the top choice, looked like it's sideways. Leave it alone. It's not trending. Airbnb, sideways, not trending. ACI, we're looking for a downtrend. So you can very quickly just go through and get these little snapshots. Let me just get the ads out of the way. Get these little snapshots of we're looking for a downtrend and we're looking for a rally in a downtrend. Rally in a downtrend. Now we can find other things to do. AWR. So I'm not seeing it. I'm not seeing anything. There we go. So IBM, start at top left, finish at the bottom right. And this time we've got a deeper retracement, a deeper rally in the context of a downtrend. So out of the first 12 stocks, it was see the speed with which we're doing. We're looking for trend, looking for specifically a downtrend. Visually, I want to see a downtrend. 12 stocks, ding, 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 ding. IBM, there it is. Start at the top left, finish at the bottom right. And in the last couple of weeks, the last 10 days for that matter, we've got a rally in the context of a downtrend. Can everyone see how it would be very quick and easy to find stocks in less than 20 minutes when you know exactly what you're looking for? I'm expecting to see a downtrend with the scan that we've done. Am I seeing a downtrend? Yes. Is there a rally in a downtrend? Yes. Write it down and put it in your favorite chart platform. Yeah, absolutely. It's sweet. Again, I've just had a few questions about, oh, it's easy for you. You've got the fancy software. Great. I've been doing this for 30 years. I want the good tools, but I appreciate not everyone's there yet. So you do it with free tools. You don't have to have, huge expense. IPG, rally in a downtrend. It's already started to resume the downtrend. ISRG, rally in a downtrend. Say it with me, folks. Rally in a downtrend. Absolutely, Brett. Absolutely. Brett's just asking, so you can use any software as long as you know the rules. Yes. Short answer for you. Now, the trade-off, Brett, is you're going to have to spend a little bit of extra time doing it. Again, I can, on my software, I can see, here's all the stocks that are in a bullish trend. Here's all the stocks that are above all 3 moving averages. Here's the stocks that are below all 3 moving averages. So here's ISRG is actually on my top 25. So ISRG, let me just put some space around it so you can see it clearly. So there we go. So row number 43. Let me just, the chart is intentionally blank, just so we can see. Focus our attention all the way to the left here. So focusing all my attention there, the chart is blank. This is ISRG. We've just looked at that on the tiny image. So the trade-off is, again, I can do this. Here's the rallies in a downtrend on my software. It's above the 20, above the 50, below the 200, and the average price I've crossed over. I can see all of that with my software. So the trade-off is if you're doing it in other software, you're going to follow the top 25. Again, if you've got my top 25, I think you have, Brett, so you can follow those. But if you want to scan for other opportunities, you can certainly do it. But then the trade-off is you're going to make a shortlist from Finviz or insert a preference. And then you would make a shortlist of the 3, 4, 5 stocks that catch your attention, like ISRG. And then you would go to your regular platform. Now, this is obviously my regular platform. So we can see when we go to the chart, okay, well, we scanned and found for ISRG. Now I can put it in my regular charting platform, and I can see if it meets the criteria that we were just describing. So there's the average price, the 50s below the 200. We've got our mechanical trends. Visually, we can see that we've got a trend that starts at the top left in the last 12 months, finish at the bottom right. Again, in the last 6 months, it has been going down. This is a rally in a downtrend. The algo you can just see is fired off a little triangle. It's actually just fired off a brand new trade today. I'm actually looking to trade this today. But we've got a brand new trading opportunity. So this is a rally in a downtrend. It meets the requirements. Price has rallied back above the 50-period moving average and the 20 in this case. This is a rally in a downtrend, and it's now qualifying to be a rally worth selling because it meets all the requirements. There is not, because it's starting to push back below, in this case, the 50-period moving average. It's starting that move down. So this is something that I can sell the rally in a downtrend. That's exactly what I'm looking for. Does that make sense? Are you happy with that, Brett? Does that kind of answer your question? You don't have to use TradeStation, but the trade-off is you don't get those, you don't get the quick way, you don't get the quick way of assessing on the left. You're going to have to go through your top 25 stocks one at a time, or do the FinViz scan and check them. It may take you 30 to 40 minutes, 2 or 3 times a week. And with software that I like, it can take me 2 or 3 minutes. Again, I don't need, when you get used to it, you don't even need to look at the charts. You can just scan down the traffic light system and say, okay, well, here's the 3 stocks that are bullish. Here's the 5 stocks that are bearish. It actually, the system is actually built into this. So I can say, hey, there's something that I need to be doing on, here we go. On 1, 2, 3, 4, 5, 6, 7. There's 7 stocks that I actually need to go and look at today because that's what the software is telling me. And because when you know the extra steps, and you'll know what those are. But yeah, it just I can zero into this. That's kind of the speed mechanism. And if there's nothing in that column, then I can go, you know what? It's a 2-minute day. There's nothing for me to look at. Close it down, come back tomorrow. So it becomes a lot easier. So all I'm trying to highlight is that the trade-off is time. So if you don't have the more premium software, whether it's TradeStation or something else, that's cool. You can do it with TradingView. You can do it with FinViz. You can do it with free software. You can do it with Sierra charts if they're still around. Insert the platform of your preference. Well, again, the trade-off is the lower quality and the less functionality and scannability that you've got. The trade-off is going to be you will spend more time doing it. Again, not much more, maybe twice as much as what we normally do, but you will have to spend a little bit of time or extra time, buddy fingers time doing it, to say the least. Cool. Right, so that is how we can do it. You've got the scan in you've got the scan. I've popped it in the chat box. Let me just double check that it went the right. If we got the scan, again, I've just posted a link in the chat box. The FinViz scans, that's the same one we have literally just built together. And if you wanted to change that to bullish, all you're going to do is change it to above the 200. Start with above, where are we? Price above the 50. And this time start with below the 20. Below the 20. So you've got a shallow, okay. So you've got an uptrend and you've got a shallow rally in an uptrend. Can you see that? So you can find bullish trades, LVS, range back, leave it alone. Looking for a trend, RWM, rally, starts at the bottom left, finish top right, looks more like a bull flag. Now I'm looking at it, looks a little bit like a bull flag. Cool. Rally, dip in an uptrend. Sava, dip in an uptrend. I'm so used to saying rally in a downtrend at the moment. I've been saying it all year. Dip in an uptrend. SDAO. So this is an ETF. This is actually that's an inverted ETF. So that's technically a rally in a downtrend. SDS. That's another short Again, I'm just catching the at the bottom of that little pop-up window. In fact, you can see that on the description. You've got these are looking like they're inverted ETFs. Many of them are. So I'm just going to ignore. So you got the daily bear, so it's an inverted ETF, inverted ETF, inverted ETF. So these are secretly all rising downtrends. So just ignore those. Again, I don't normally trade leveraged ETFs or bears, but Las Vegas Sands is in a range. Constellation Energy is, dip in an uptrend. That's essentially what we're going for. So we can also do the below the 50. So you've got 2 possible scans, slightly deeper dip in the context of a trend. So we want now, where are we? Below the 50. So above the 200, below the 50, below the 20. That gives us a few more choices. Just visually, just looking down. Okay, there's no ETFs there. So AES. It looks like it's half and half. The first half is bullish, and the right half is it looks like it's meandering. So we're looking for a picture perfect. We want something that is there we go. So first solar dip in the context of a trend. That's what we're looking for. So when you are really restrictive with what you're looking for, you don't have to trade everything, which is picture perfect. That is a dip in an uptrend. That looks great. Make a note of first solar and then go and have a look on your regular charts. Let's go and do that. First solar, FSLR, first solar, perfect. So we found something on the scan dip in an uptrend, people. That's what it is. Now, because I've got, so this is the other trade-off, Brett. If you don't have TradeStation, and more importantly, all my students have access to my algo. So what I can do is at the click of a button, and any of my students can do this. Oops, what have we done? Any of my students have done this, can do this. Where's trades? There we go. You can say, if I bought the dip and sold the rallies on First Solar, would it be profitable? Well, it's not perfect. It's not, we've not got a huge amount of data. It's only been around since 2006. But it looks like it's got a positive expectancy. It's not like the S&P where it's up and not coming back, but you've got, a reasonably positive equity curve. Now, what you can also do is you can go and have a look at the details. It's positive on the all trades, positive, long trades are positive, short trades are positive. So it's got, a positive expectation. It's not the best one I've seen. So you've got a positive expectation on First Solar. So if you bought the dip on First Solar, you've got a reasonable expectation. And also historically, we've just validated that buying the dip and selling the rallies on First Solar might be worth our time. So how I would treat this is find a stock, validate it, plug it into the algo, which I appreciate not everyone has to do. Again, all the benefits for having an algo and hopefully selling you on TradeStation is I get to validate the strategy. Like if I just bought the dip, sold the rallies on this stock, would it work? Yes, great. So I would include this in my universe of candidates. So First Solar has been scanned for, found, validated, and I get the choice now to say, well, should I or you include this in your top 25 stocks? Because the last ingredients to making any system work, not just mine, any system, is consistency. I don't know which setup's going to work. All I know that is on average, as we've just seen, on average, it works. We've got an expectation that it should work. So I need to trade this setup, the next one, the one after that, and look at it for the next 12 months. Because what you don't want to do, you never want to fall into the trap of with any system is trying to cherry pick, trying to go, I'll take this one, but not that one. Because that will send you fucking mad. It really will. We've done it. I've done it. You've done it. Pulled my hair out over it, trying to be selective and think that I'm smarter than the system. I am not smarter than the system. The data says, yeah, we can buy the dip and sell the rallies. Which dip and which rally? I don't know. Let's get rid of the uncertainty. Let's just know that it works on average. So it works on this stock on average. Not the best equity curve, but it's positive to say the least. So this is a good stock to trade. I need to trade this setup, the next setup, the one after that. I need to trade it for at least 12 months so that I can emulate the type of positive expectancy that we've just been talking about. Does that make sense? So that's kind of like the last piece of the puzzle. If you need some stocks to get going, I appreciate not as more kind of the theme of today's show is finding quality stocks. If you don't have the backtesting software, if you're not inside the community, just take a screenshot of these. These are good stocks. These all trade very well with the backtest, the algorithm that just went through. Again, most people here have been exposed to my process, but if you want to check out a stock of your own, if you've got a few stocks that you're looking at, for example, I was asked about GameStop on LinkedIn. I'm quite active on LinkedIn. I was asked, can you analyze LinkedIn? Can you look at it? Firstly, it's a junk stock as far as I'm concerned. But why would you want to trade a stock that has been effectively trading next to zero? This was just a meme stock. I don't think this is going to ever happen again, but it's been going sideways for, even if you were going to trade a GameStop, for example, we're trying to trade the trend. There is no trend to trade and hasn't been since the GameStop, the meme stock nonsense. So for, almost 18 months now, it's been going sideways. So so again, for our style of trading, we want to see a trend. It's a trend trading system. So is there a trend? Does it start at the bottom left? Does it finish at the top right? Or does it start at the top left and finish at the bottom right? Neither. We've got multiple crosses in our average price. We talked about this last week, the 20 and the 50 flipping and a flopping. For the only way for that to happen is if price is oscillating. It's non-trending. Draw a big box on it. If you must trade GameStop, trend trade, you're waiting for a breakout. Now, the piece de resistance. Should I do that? Should I trade GameStop? That's the big uncertainty. Am I trading the right thing? The click of a button, we get to validate it. You know what? It's like First Solar. It's good, positive expectancy, but it's not great. Despite the meteoric rise that we saw over the last 20 years, GameStop's not great. Why would I bother? There's better things to trade. Again, looking at the dollar amounts, if I put $1,000 in, $14,000 out on average in the last 20 years, would it not be better to trade the S&P? You could trade the S. Why would I want to trade GameStop where I could put there's a far better, if I could only, I don't, but if I could only trade one thing, why would it be GameStop? We get to validate the strategy and we get to try validate what we're trading. Should I trade this stock? Well, GameStop, no. The S&P is better. This is the equity curve. So if we're trying to validate what we're doing, is this the right opportunity for me right now? If I could only trade one thing, is this the thing? Yes. Is GameStop the thing? No. So this is what we're trying to do. A lot of the time, our job as traders is to figure out what we're not going to trade, which is the best opportunity or which is the best group of opportunities that I can trade. And that's why we've got the top 25 trades. This, for me, is what I consider to be the most liquid stocks with options and liquid options for that matter, that consistently proven by the algo to back test well. They're my top 25. That's my universe. I am not looking at anything else other than the top 25. I am farming the opportunities because I don't know which one is going to be the one that works. Maybe several work back to back. So I've got to take the trades with the frequency that they set up so that I can emulate this performance. And this is how we make shitloads of money. Excuse my French. So with that said, let's do a quick round robin. I've been talking about okay, Rodrigo, need to go. So I've been talking about this bullish sentiment. I'm thinking that this might be the bullish move. I think we might be done. I'd like it looks like we're going to see a big Friday finish with 30 minutes into the open. We're starting to see a little bit of a rally. But it's looking like our sentiment tool, the sentiments being the number of stocks past the 20-period moving average, it has been a good and leading indication for when we're at these extremes. When we're at these extremes, we have seen price rally. Again, I'm just marking off the dots. It could be a big rally, could be a small rally right there. Could be a big rally like there. Could be big or small. And the opposite also true. We saw a huge one there. So we're seeing it happen here, and we've got a teeny tiny rally. So, I think that might be it. I'd love to be mistaken. I'd love to be bullish, but, unfortunately, the data for the moment, the sentiment is just suggesting that, this rally might be out of pace. Again, I'm not seeing any bullish setups to trade or many bullish setups to trade at the moment, despite actively and very keenly keeping an eye on them. So I can only, trade what's in front of me. Again, the S&P, again, firmly in a downtrend. This has got to be, so although the sentiment is bullish, it would be a part of a rally in a downtrend. So again, there's nothing really for me to do there for the moment. SLG did set up for me. Yeah, absolutely, Glenn. It's I'd love to be bullish. As I said there in our community, I'd love to be bullish. Really would. The sentiment is certainly suggesting, but there's just nothing bullish to set up. As I keep saying, I was asking myself earlier in the week, where's the trade? Where's the bullish trade? It wasn't there. We actively looked for it all week. It just wasn't there. So if it's not there, I can't force the trade. I think that's the difference as well between a novice trader and someone who's maybe a little bit more seasoned. It's not a case of trying to trade every opinion. I'd love to be bullish. That is my opinion. But the data has not given me a bullish setup on any of the timeframes that we'd like to trade. So I can't place the bullish trade if it's not there. I'd love to, but it's just not there. I think, if it was 20 years ago, I probably would have recklessly put an opinion-based trade on and then wondered why it wasn't working. We've all done it. But I think the other thing that kind of having a systematic approach, an algorithm, having the data at the click of a button, validation of the strategy, and with as much data as you can shake a stick at, we get to look at the charts and understand, like, why there is no need for me to force a trade. If I just wait for the opportunities, they will present with them. But living through the moments of, I'd like to be bullish, or I'd like to be bearish, my opinion is this. Put your opinions aside. You know, the hard part is the waiting for those opportunities to unfold and present themselves. Anyway, one of the opportunities that did present themselves just a few days ago is SLG. I've been in and out of this, you can see visually. The last trade timed out. I think I've got a tiny, I think it was 50% or so return on capital. So and I was running out of time again. I use options, so I am on the clock. So I've run out of time, but it did set up a gain for me. So I've repositioned. I'm just waiting for that to get going. Baidu is loving Baidu at the moment. Again, it's lovely selling off. A little bit of a gap down for the moment. It'd be interesting to see if this is an exhaustion gap. We've got this breakdown and out. This is one of my stocks that I like to trade on the lower time frames. We have had some interesting setups. Again, lovely sell the rally in a downtrend. Again, another benefit of trading options is only with hindsight do I get to say I was early on the trade. It did continue to rally because I used the full price of the premium on the option as a built-in stop loss. So if it carries on rallying, it doesn't matter how deep it goes. You know, I'm not stopped out in the traditional sense. So this gets its chance to be managed more effectively. And that looks like it's running to profits very nicely indeed. Just an example of the opposite where you miss time trades. Again, another reason for option. This is USO. So again, sell the rally in a downtrend here. Again, it's not working. Again, they don't all work. But what I get the chance to do is because I'm using options in the non-traditional way, then I get a chance to manage this more effectively. That my objective on this trade is if I can get out at break even, that's going to be an awesome trade. So I really would stress that, you know, options are worth considering, but use the full price, the premium that you have access to as your built-in stop loss, as your risk control. And then you don't have to worry about stop loss placements. It just frees up the mind. It's very liberating when you're not worried about being wrong. You're only focused on managing the winners. So this is one, again, the winner in this case would be if I can manage it more effectively prior to expiration, and ideally for a break-even trade. And this is going to be a great trade. Will it make money? It may collapse tomorrow, but, you know, we'll find out. Again, with the benefit of hindsight, I just want to show you one that's on the board that is not working for me. So again, just how I'm managing this is, again, it's managed on the entry. First of all, fixed risk. The price of the option is the risk. It's the premium. The worst that could happen is I lose the price of the premium. That is essentially the stop loss. It's built in. But as it's underperforming, I get this chance to, well, if this comes back to break even, I'll reposition. I'll get the hopefully a break-even trade out of this. And if it never comes back, well, think about it like you were stopped out. When you're wrong, you're always wrong. But I see no benefit to closing a trade early for a loss when I've got, you know, another, you know, 50, 60, 70 days to figure it out in a better way. So again, I would really try and urge you to move away from stock and use stock options as an alternative. It is lots and lots and lots of benefits. Anyway, with that said, I think that's it. So we've got Baidu, excuse me, Baidu on the bear side, BFH on the bear side, AMD on the bear side on both the daily and the 60-minute strategies. Again, they've all set up in the last few days for me. Everything else we spoke about last week. Energy is essentially on the bull side. COP is a rally and an uptrend. CVX is resuming its uptrend. LNG, rally in an uptrend. Again, we've already had the dips. We spoke about these a few weeks ago, but they're all the new bullish trade opportunities that's on the bull side. So again, a couple of bullish trades, a couple of bearish trades. Again, everything is going great. I'm just wrapping up, Zeke. So that's it. Have a great day. I'll speak to you later in the community. So I think that's it, folks. I think I've done my job here today. I think my promise at the top of the hour was, how do we find quality? Stop chasing every stock first and foremost. How do we find quality stocks? Again, if you don't have the same tools that I've got, that's fine. You know, there's alternatives. There's ways around it, and we can zero in on some of the best stocks that the market has to offer. The trade-off is you will need to have some visual inspection. That is the trade-off. But we are looking to trade the trend. So as long as you've got that visual trend, it starts at the bottom left, finishes at the top right, that'll do as a proxy in lieu of having the algorithm that you can plug into the IC. To be fair, before I actually found a program, that's actually how I did it. I would have a visual confirmation of the trend. It starts at the bottom left, it finishes at the top right. It's been doing that for 12 months what are the chances of the trend suddenly not working in the next 3 or 4 weeks? It can happen, but it's unlikely. So just keep that in mind. You can back of the envelope it, while you're starting out, or even to be fair, as you're going. But I would urge you to get some of the more professional tools. You are running a business, so if you've got the, you want to take it seriously, then run a business. Get the tools that help you and assist you to make sensible trading decisions that can, for some people, be quite life-changing. Anyway, I think that's my pitch for some of the more premium tools that are available. I think that's all done with. Right, so you have been, well, I forgot to introduce myself at the beginning for the new people. You have been watching Phil Newton. Weird guy with a strange obsession for flamingos. As always, I'm not a Wall Street guru. I've got to get the disclaimer in there. You shouldn't listen to me. I'm not a financial advisor. Past performance, no guarantee of future performance. However, we have seen that it does sing from the same song sheets. I do get my own results. We've got the broker statements on the dance cards there. Some of the last trades, again, there's the AMD trade that we were just looking at. Again, it has run to its conclusion. I've initiated a new trade, as I mentioned. The SLG trade that we just mentioned, the previous trade was running out of time, so I've initiated a new trade there. So they're the two that we were just talking about just from the other week. And if you would like to work more closely with me, you can do. It's an invitation. If you want to, it's there. If you don't want to, that's cool as well. But my promise to each and every one of you that does decide to work with me is, my job is to help you make it work. I've worked with people who've been trying to make the trading thing work for 5, 8, 10 years, in a few instances 20 years trying to make it work, and still at it not making it work. So if you want the fast track and to jump to the front of the queue to make it work, and you want to plug into a proven system, just know that there's one available. Let's have a conversation. I don't know if what I just right for you until we do that, but yeah, just shoot me a message, click reply on the emails, or follow any of the links that you see from me. That's it. That's done. Right, folks. So where you're at, what was your biggest takeaway? What are your thoughts? Where you're at? What was your biggest takeaway for the day? Pop a comment in the chat box. What was your biggest takeaway, if any, for that matter? Fabulous. I'm not seeing any comments. I'm guessing everyone's got, so there we go. Keep it simple, as always. Keep it simple. Absolutely right. I think that sums up what we were talking about. As I sometimes say, it takes longer to explain than to actually do. It takes longer to explain than to actually do. There we go, Ray. Ray's on the corkboard, the virtual corkboard. There we go. Thanks very much for your commentary. Right, I think that's, well, let's do it then. Let's hang up our spurs for the day then. As always, I would just like to show some gratitude. We could all be doing other things. I do say this every week, not because it's something fancy to say. I just want to show some appreciation. We could be doing other things with our time. We could be with loved ones. We could be doing the day job that we're supposed to be doing. But you've decided to spend the last hour and 10 minutes with me. So thank you very much for doing that. It does make it better for me when you're active, which you all have been. You're commenting, you're liking, which is awesome. So thank you very much for being a part of the community. As I mentioned, if you would like to be more active through the week and not just on Fridays, again, feel free to join the Slack community. The link is in any of the emails that you receive from me. And you just click the link. You will need to register. It's a separate software. And you can come and say hello. You can just click on my name if you want to direct message me. If there's a question that I've not answered, just shoot it over. Again, there is a general message. Oh, and I almost forgot. So there we go. We've just posted the latest podcast episode. So the direct links are there. I'm sure I'll send an email out as a reminder later in the day. So with that said, let's do it. It's game over. Thank you very much for your time and attention. I'll see you all at the same time next time. And until next time, toodaloo trader. Bye for now.